Score. Okay, let me stop. What's up, folks? Thanks for tuning in. It's been a while since I did one of these, but it's good to be back on. So, for those who don't know, my name is Michael Mattis. I'm an entrepreneur, business owner here in New York City. I run a social media agency called The Local CEO, where we help local business owners generate leads and sales for their business. Okay, so today I'm going to be talking about something a little bit different, though. One of my personal interests, which is finance and investing. And today is going to be like a little bit of an intro. I'm not going to go too much into it, but it's going to be like a 4-part series. So today is just the intro. Okay, so yeah, so let me before I go any further, let me share my screen and read this disclaimer to you. Okay. Share screen. Application window. Yep. All right. So all right, I hope y'all can see this. Okay, so this legal disclaimer applies to the use of Mattis Investment Group and its related partners. Trading stocks, commodities, ETFs, or foreign exchange on margins carries high level of risk, may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in any securities, you should carefully consider your investment objectives, level of experience, and risk appetite. Mattis Investment Group is providing this site and related materials for educational purposes only. Decisions to buy, sell, hold, or trade in securities and other investments involves risk and are best made on the advice of a qualified financial professional. Any trading in securities or other investments involves a risk of substantial losses. The practice of day trading involves particularly high risk and can cause you to lose substantial sums of money. Before taking any trading program, you should consult a qualified financial professional. Please consider carefully whether such trading is suitable for you in light of your financial condition and ability to bear financial risks. No information or opinion contained on this site should be taken as a solicitation or offer to buy or sell any currency, equity, or other financial instruments or services. Opinions expressed on Mattis Investment Group are those of the individual authors and do not necessarily represent the opinions of MIG or its management. MIG has not verified the accuracy or basis in fact of any claim or statement made by independent author. MIG will not accept liability for any losses or damage, including without limitation to or any loss of profit which may arise directly or indirectly from use of or reliance on information contained on this site. Past performance is not indicative or indication of guaranteed future performance. Okay. So let me go back. All right. So, said that to say this. Do your homework, kids. And don't take anything as I said as professional advice. All right. So, we're all business owners. All right. So let me, well, I should probably share my screen again. But before I do, let me just say, we live in a day and age where things are unpredictable, okay? Like, you have to be financially prepared to be financially healthy. If you're not prepared financially, you know, you're going to be financially sick, let's just say. So, um, what was the first thing I wanted to touch on? I lost my train of thought. Just like that. Okay. So I have a lot of friends. I shouldn't say a lot, but I know quite a few people who are investors and traders, right? So, um, there's an old saying that goes, if you fail to plan, you plan to fail. So, like I was saying, if we live in uncertain times, if you're not prepared for what's coming in this economy, um, you're gonna get screwed. You're gonna get wrapped up in the thunderstorm and left on the street, right? Because the thing is, a recession comes every 8 to 10 years in our world, especially, well, in the US, right? And the last one was 2008. Um, Started late 2007, but really hit 2008. And 12 years later, we still haven't gotten that next one yet. Um, it's coming. No one knows when, but let's just say it's long overdue, you know? Just like, a good example, like every day you take the bus at a certain time to go to work. And if you know the bus is supposed to get there 8:30 and it's late, what are you gonna do? You're gonna look for another option to get to work. Or you could just stand there and wait 15 minutes, 20 minutes, half an hour, 45 minutes until the next one comes. Now, the bus is gonna come, but you don't know when, right? So if you know it's supposed to be on time at 8:30 every day and it's on this specific day it's not, that means, and this is your daily routine, so if it's not there at a certain time on a certain day, that means you should have another option set up and ready to get from point A to B. And you have to treat your finances the same way. Okay. So um so yeah, back to what I was saying. So I have friends who are traders and investors, and me myself, um, I got the investment bug in 2016. Right? Um I went to a workshop in Brooklyn. It was by Robert Kiyosaki, and they were teaching um people how to invest in in the stock market, and they touch on different securities, but uh, stock the stock market was the main thing they were emphasizing, and that's when my journey began. So they were giving away some materials at the end of it, so took that home, ran with it, went through part of it. I didn't read the whole thing because it was a lot. Some of it was on PDF, but I just basically skimmed through it, took what resonated with me, and went ahead and did my own research and started figuring out how to invest in these different things. So the first thing I started with investing in was binary options. So binary options is basically um, you're buying stock options but it's different in the fact that you're not paying the same amount that you would pay for a stock, and you're not paying the same amount that you would pay for an option. But it's similar in the fact that you're either going to place a call, which is for buy, or place a put, which is for sell. And the objective is to bet a certain amount that you think the stock price will expire in a certain amount of time. So let's say Walmart, is trading at $65 a share, and basically it's asking you, what do you think the price will be in the next 2 hours, in the next 60 minutes? And you could either say it will be below $65 or it would be above $65. So depending on what obviously you would have to know. You wouldn't just, you would have to know how Walmart stocks function. You wouldn't just go into it and, buy and sell like that. So basically that's how you would make money, and you get paid. So whatever you invest, and it's not a lot to invest in either. So you can invest anywhere from $25 to $50 to $80 to $100 and more. But minimum, they usually start like $10 for binary options. So whatever amount you invest, you get that back, and $7 if you win. So you're risking $10, but if you win, you get 17. If you lose, then you just lose the 10 that you invested. So you could pick the amount that you want to profit. So you could risk $10 and profit 25. So if the trade goes in your favor and you win that trade, you get $35. If you lose that trade, you get $10. I mean, if you lose that trade, you lose $10. So it's just as risky as trading options, but it's not as, it doesn't have that much of what should I say? You don't have to do that much work to figure out, what's gonna happen within the next 2-3 hours of that stock. Okay, so I hope that makes sense. But anyway, I just tell y'all to say that's how I got started. So over the last 4 or 5 years, I've tried different things. After that, I went into trading Forex, which it really resonated with me, because in Forex you need less money to get started investing than in the stock market. So in the Forex you could get started trading as little as $200 or $100. But if you want to make, if your risk appetite is small, you should invest at least $400 or $500. Like if you can't afford to lose $70 in a day or $100 in a day, there's no way you should invest $100. Then you should invest like $700-$800. So because those kind of losses could happen. But in Forex market, the brokers, they charge less commissions, and there's less there's risks, but there's less X factors that you got to worry about. And I would say the traders in the Forex market, most of them are more technical traders. In the stock market, you'll find more fundamental traders, meaning they use data and reports to decipher how are they gonna trade a certain stock. Okay, so me myself, I prefer forex because of the fact that it's less of an investment, and the brokers, they charge less fees. I mean, when you're trading stocks, you're trading like you're getting charged like $5 to $10 per trade. So if you win $120 on 3 trades, you're giving up like $20 to $30 profit just because of the commissions alone. So, and my recent interest has been cryptocurrency, and I started studying that late 2017 when the craze was at its peak. And the so I have friends who are invested a lot of money in cryptocurrency, and they were urging me, to buy some and get in and start trading because the price was going up. Like every day it was going up like $300, $400, $500. It's like crazy. Like most of us millennials have never lived through the dot-com bubble, but if you remember 2017, 2018, the dot-com bubble was pretty like that, because that's exactly how it went down in the crypto world in that 2-year period. So me, I was just patiently waiting because I'm not going to invest in something I don't know about. So I was just doing research like every day, watching videos, reading articles, going on different blockchain websites and crypto websites, and just getting the knowledge, And I would say it was like February. It's like February where I made my first purchase of Bitcoin. And at that time, now remind you, I was watching the price of Bitcoin during that period that I was studying and learning. And Bitcoin went from like 13,000 and change to 19,000, almost hit 20,000. Like in February 2017 or 2018? I think it was 2018. It almost hit 20,000. And I was like, damn. And I was seeing people buying Bitcoin around 15, 17,000. I'm like, y'all crazy? Like, why would you buy when the price is this high? And because of, my my self-education and learning how to trade, shout out to TSU, Trade Smart University. That's where I learned how to trade, actually. So that was beneficial to me. And I so having that background and understanding the basics and how to read the price chart, how to read chart patterns and candlestick patterns and the different indicators. I knew that I'm not gonna be stupid and buy Bitcoin when it's around 70,000. Like, that's just stupid to me. That don't make no sense. So I was like, I'm gonna wait until it comes back down to at least to 12,000. And when it did, that's when I made my first purchase of Bitcoin. So over the years, I kept buying a little bit, and when I made profit, well, I would say I didn't make any profit, because what happened, if you remember 2018, the big cryptocurrencies were starting to crash. So like mid-February, it hit like almost 20,000, and then it went down and down and down. Went from 14 to 13. Next day it dropped to 12. Next day it dropped to 10. I mean, it was just bloodbath. So anybody who bought at those prices, they just got wiped out, killed. Like, they lost 70 to 80% of the money they invested because they bought it at such a high price. So Me, um, I saw negative returns, but my strategy, was long term, just to buy and hold. Like I wasn't looking to trade Bitcoin. So, um, so yeah, for that period, Bitcoin went from over the next 6 months, it went from like 20,000 to all the way to 11,000. And for the rest of the year, it just kept going down and down and down. I'm like, holy shit. Anybody who get Bitcoin below 10,000, they're gonna be set up for the long run. They just buy and hold, they're gonna be good. So it was below 8,000 for good, or was it 2019? Yeah, for a good part of 2019, it was below 8,000. And if you bought it anywhere below that, you know, good for you. Because look what has happened in this year. The price went from as low as 3,200 and rallied up. Took a dive in March. I'm gonna jump in the charts and show you all in a second. But matter of fact, let me share my screen and show y'all right now. I hope this thing don't mess with me. Okay, I'm going into TradingView. They want me to sign in, but I don't remember my password, so I'm not gonna sign in right now. Hold on, let me close this thing because it's annoying. Nope. Okay. Thank you. Okay. Let me close this up. All right. Let me go back. See if I could go back. Let me try to go back to 2018. Okay, boom. So right here, this is when, well, what month was this? October. Yeah, around October, November. This is when I started studying this blockchain technology and Bitcoin. And look at how high it was. It hit a peak of, what was that price point? I'm gonna have to change this. Okay, it hit a peak of 19,666. And then boom. Look at that bear run. It lasted all the way to January, February, like I was saying. So almost like a year and a half. And then March of last year, buyers started coming in, price went up, hit a peak of 13,880, and it's hasn't really been trending sideways, but it's been a little bearish. 2019 was, after that rally, it was bearish for like 6 months. So that's from like September to September to like January. And February went up. March, like I was just saying, took a plunge, went back down. I mean, if you bought it at right here, this would be a good price point. Anywhere below, like anywhere between 14,000, not 14, 4,000 and 7,000, or anything below 8,000, you got it at a good price. But so let me zoom in to this year. So this year we've been pretty we've been rallying, you know, we've been in an uptrend. Price came down, went back up, pulled back a little bit. We're in October right now, so prices that are good. It's at a good pivot point right now. But let me come back to me. Yeah, so like I was saying at the beginning, you need to invest in things that's gonna work for you while you're not able to work. And waiting 20, 30 years until retirement, so you could start getting some little residuals, you know, is not a smart strategy, because they already predicted, you know, the government is gonna run out of, are not gonna be able to pay out those pensions to the baby boomers and people who are in their 50s that's going to be retiring in the next, you know, 10 to 15 years. You know, like the money that they have for those pension funds is like low. So people retiring, they're not going to be able to get any of that. If they do, it's going to be a small percentage. And some people, you know, the way they set up their 401k or retirement account is, you know, they know their company has a partnership with some retirement account, you know, partner or a company, and you know, they let their employees invest in something like TIA. It was a TIAA, and they invest. They take the employees' money and put it in some of these securities that's not yielding anything, and some of them are like they're just trash, like, because they're not performing at all. And I'm wondering how you gonna, you know, generate money to save for retirement when what you're invested in is not producing any returns, minimal at best, you know. So it just doesn't make sense why someone who, you know, who's planning for retirement would rely on that alone, because not one, is not producing any dividends. Two, it goes up and down. There's not much of a profit. And three, like I was just saying, you're not gonna be getting much from that account, especially when the stock market is going down. So it doesn't make sense to me. So like present day right now, I don't know what age bracket you're in, whether you're 30s or 40s or 50s, but you want to put your money to work for you. Like I think Warren Buffett says, I'm paraphrasing, but he says something like, if you don't figure out a way to make your money work for you, you're gonna be working for the rest of your life until you die. And it's true. Like I'm like my millennials, like us, like we cannot follow our parents' blueprint, which was effective in the 60s, 70s, 80s, that blueprint worked. Working, going to college and graduating, getting a good corporate job or good city job, and staying there for a good 30, 40 years and putting some money in retirement and wait until you retire so start collecting that retirement check. Like, that model worked for them. That's an old model. Like, we're millennials and Gen Z, who's right behind us, like, we cannot follow that model. It does not work in this economy. So if you're following that model, one, you're not thinking far ahead. Two, that's not a financially stable model. And three, that's a broken model. Like, it doesn't work in 2020. It's not going to work for 2021 and 5 years from now and 10 years from now, because the dynamics of the economy has changed. Politics have changed, business has changed, technology has changed, the financial institutions have changed, the way business is done has changed. You understand? So if you're expecting to get those same kind of benefits and returns from a retirement account that our parents did, it's not going to happen. So you have to start thinking different. I always hashtag this on social media. Like, think different, live different. And if you keep doing the same thing over and over, you're going to keep getting the same result. So, when your parents is telling you to go to school and get a good job, it's not bad advice, because that's what they did and that's what their friends did, and it worked. But that may not be beneficial for our generation and Gen Z and the kids coming up, because that model is worked for that time and period. It worked for that era. It's not going to work now. You know what I'm saying? Now, you should still go to school and get an education so you could prepare yourself for the workforce, and have a backup plan just in case. You need some good practical skills as of to be able to work in any economy and in any city, if you may move to a particular city or country. So, but if you choose to get out of that rat race and move into something that's going to be more financially rewarding, you shouldn't get condemned for that. They shouldn't ridicule you for that just because they didn't do it that way, or just because your friends didn't do it that way. No one should ridicule for that, because a lot of our friends, a lot of our parents, they were trained with that old blueprint. This is how you should do things if you want to be set up in life. But like I said, things have changed, and that old model doesn't work anymore. So you have to follow what's working now, follow trends, because those who get in front of trends are the ones who are going to become millionaires. So right now, one of the biggest trends is digital currency, blockchain, cryptocurrency. Like, that's a trend of our time. So I would advise anyone to start learning about that as soon as possible, because believe it or not, Bitcoin is the future of money, and it's gonna disrupt the current financial institutions and the current system that's set up, and it has also. So I would invest some time and money into learning how that works. So So let me transition. How long I've been running for? So I'm gonna stay on for another 10, 15 minutes, and then I'm gonna end it. I was saying this is just part one. So next week I'm gonna come on and go a little bit deeper. But should I touch on that? I'm gonna save that for next week. But I have some friends who always ask me like what stocks I should invest in. I would say it doesn't matter, right? Knowing what stock to buy, like it doesn't. You can make money with any stock. Understand this. Like if you're a trader, right? You can make money with any stock. If you're an investor, you can make money with any stock. But most of us are not accredited investors. So I'm just talking to the average Joe right now. So if you're looking to get into the investment world, into trading, I would suggest you become a trader. All right. So an investor, they're in it for the long run. You know, they'll buy a large amount of shares into a company, and their goal is to buy it and hold it, for 2, 3, 5 years, and see a return over that time, and then withdraw some of the profits. And I should have put this up on the slide, but a trader, an investor, if they only make money when the stock market goes up. If it goes down, they're gonna lose a lot of that money they invested, and they can afford to lose that because they're an accredited investor, which means the average income is like 250,000 and above. So they could afford that. But if you're a trader and you're just opening an account, with a couple thousand, you can't afford to buy and hold. So I would suggest anyone getting started, like I would go, there's 2 routes you could go, the investor route or the trader route. Now you see a trader, they can make money 3 different ways. They can make money when the price of a stock goes up, when it goes down, or when it goes sideways, right? So let me get rid of this. So that's why I'm saying it doesn't matter what stock you invest in or what stock you buy. You can make money either way. There's people making money when the stock goes down. So if you see a company, if you see a company like Apple whose stock has been dropping for the past 4 weeks, that's a bad thing for the company. But if you're a trader, like right here, since September to all month of September, basically, until the first week of October, it's been in a downtrend. So looking at this, you would think Apple's performing bad, but people are still making money in this downtrend. Because there are traders who are shorting the stock and making a profit. And when it rallied up in the past couple of weeks, went to a high of 125, you could have made money here too. So it doesn't matter. Even right here, look, July 2010, July 30th. There's no trend right here. This is what they call consolidation. The market is trading sideways. There's no indication of what way it's going to go. but it's just been consolidating for the past like for a couple weeks. But there's traders who are good at scalping that made money right here. You know, stock wasn't doing much, but it was going sideways, and there are traders who made money, and there's traders who made money when the stock went up like this, and there's traders that made money when it went down. So understand that all the stocks listed on the S&P 500, all the stocks you see on the Dow Jones, on the NASDAQ, doesn't matter what stock you choose, you can make money any way. As long as you know how to read the price chart, how to read chart patterns, how to use the indicators to your advantage, you can make money. Now, there's good stocks and there's bad stocks. And you'll know which is a good stock because you hear their names all the time. I give you a quick tip. You could put these stocks in your top 5 because they're global. They call it the FANG stocks. FAANG, the FANG stocks. These are the top 5 most traded stocks in the US on the S&P 500. They are Facebook, Apple, Amazon, Netflix, and Google. Like, watching those will give you a good indication of where the market is going to go on a weekly and monthly basis. Okay? And I'm going to give you another thing that I watch too, which is the Dow Transportation Index. They call it DJI. All right. No, not DJI, DJT. So the Dow Jones Transportation tracks, well, instead of reading it to you, let me just, instead of just telling you, I'm just read you what it does. Overview. But okay already. And this is not a stock, by the way. This is an index. Okay, it tracks the performance of the transportation industry. Okay, the commerce, things that businesses need to get, like everything you see in the grocery store, it has to come from somewhere, and the transportation industry is a big part of that. So if the transportation industry is performing well, which means vans and trucks are on the road, moving from country to country, transporting different products and produce to different local cities and grocery stores, then that's a good thing. If there's not much, movement going on, you're going to see a lot of red. You're going to see a lot of red in your screen. Like right here, you're going to see it going down, like right here. So this is just a good indication that tells you how healthy the current stock market is. Because if businesses are not getting the products and produce that they need, to sell to the end consumer, then this is gonna, they're gonna go out of business, and this is gonna reflect that. So Um, surprisingly, during the pandemic, it's been performing pretty well. It's been in an uptrend. The most bearish it's been. Well, actually, it has recovered. So as you can see, pre-pandemic, it was doing well. It was at around, it was up around 11,000, 11,500. Then pandemic happened, government shut down, dropped all the way down below 7,000. And you could see, you didn't even have to look at this to just know the impact that the economy has had and businesses have had. But if you wanted an indication of what was coming, you could have just looked at this, and it would tell you how else that industry has been performing and how the economy is, how healthy the economy is. So it's rebounded pretty nicely since end of March. It's rallied it quite a bit, and it's actually gotten up back to previous highs, which was in February, which is pretty incredible. So that's just another indicator you guys could use. Okay. So holy crap, it's almost 4:30. Yeah, guys, so that's it. This is just part one of a 4-part series I'm doing. Hope you guys got value from this. If you have any questions, you could just DM me. This is going to be posted on YouTube by tonight, and follow me on Instagram. That's Michael_Mattis. That's MIKAEL_Mattis. Okay, I'll post it so you guys could see. Go follow me on Twitter. It's the same thing. MIKAEL_Mattis. Bing. Okay, that's IG, Twitter. So you can follow me, send me a message. And if you have any questions, let me know. And I'll try to answer it to the best of my ability that I can. All right. So you can always go back and watch this. And for everyone who wasn't able to make it live, it's going to be up on the YouTube. All right. So that is it. Next week, I'm going to be touching on going into more reasons of why you should be investing, and the different asset classes that you could invest in. Okay. So I'm not sure what time that would be as of right now. Most likely it's going to be in the afternoon, anywhere between 12 and 4, similar to today, but I'm not sure the exact time yet. But when I do, you will know. If you follow me, that you will definitely know. So you could add me on Facebook too. But yeah, so that's it. Hope you guys got value. Hope you learned some things. And I am logging off. Enjoy the rest of your weekend. And Stay safe, stay vigilant, and stay on the cutting edge. All right. Peace.